Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market had a volatile week, falling sharply early week, having a midweek rally, and then pulling back again on Friday. The week did start sharply lower as there was lots of disappointment on Monday. The trade war picked up as U.S. and China talks officially broke down. Uber came out with its worst IPO ever, worst first day ever for an IPO, falling so sharply. And Apple had an 11-point decline, which is big for that stock, as SCOTUS ruled that iPhone users could sue them for antitrust. So Monday was down really big. S&P 500, 70 points to the downside at the close, and the Dow Jones Industrial Average down 617 points. Tuesday was different, however, as more false rhetoric came in out of Trump. And all the mouthpieces he has out there said that the U.S. and China were still talking. Well, the stock market jumped to the upside on that, but then closed softly. China calling it now the People's War. Wednesday and Thursday brought a better market. The market moved up as Trump delayed further tariffs, or those tariffs that were going to come on the European autos for about 6 months. And then the Fed heads were out talking like crazy. Brainerd and Kashkari, they both said, let's let inflation run hot. Let's get it over 2% and stay there for a while. Of course, they haven't been able to get it to 2% for any period of time. And 2% still erodes our buying power. So I don't know what's so good about inflation that they want to push it up that way. Let's get some deflation for a while. Let's buy things cheaper. Right now what they have going on is they have these interest rates extraordinarily low, is they continue to erode our buying power when they try to inflate it, and at the same time they try to stabilize the market on the backs of savers and seniors who are basically getting very little for their money and for so long got zero. So it's a horrible thing that the Fed is doing out there, and you heard me say that enough. Well, by Friday, the rebound was over, and that was helped to the downside by Deere missing on earnings. They're blaming the fact that they cut guidance on the trade war. We're going to talk more about that in the worst for the week as the Deere stock got hit. Baidu also moves down very sharply, 12%, as their online ads are falling. And pay attention to that for Google and Facebook also. If the online ad business starts to soften, well, those stocks that are market leaders will get crushed. And the market on Friday was mostly listening to hardline talk out of China that said they're not going to negotiate under threat. And also Donald Trump blacklisted Huawei, which means that they can't buy any U.S. tech products at all. And that sent the Huawei bonds into a collapse mode, and that's also really bad for China. The market was way down here on that on Friday, and then came all the way back. It was like a double whammy. First of all, we got good consumer sentiment numbers that came out, and those were like at a 15-year high. And then news came out that really, I hate to hear this when other analysts get such bad press, but Gartman came out and put out a sell signal, and there's almost countless people that are watching that as a reverse indicator, so the market rallied back very strongly. S&Ps went from down 20 to up 8 right after that news. It was like in your face. I don't like that when they do that because, I don't want other analysts out there getting a bad rap. They're part of my industry, right? Well, the stock market anyway came back and then now has moved back to the downside here at midday as we're recording it in this very volatile and choppy week that we've been seeing. Our cycle analysis is a little bit different than other analysts out there. We deal in time and price. That is what cycle analysis is. And the stock market is clearly in a correction, but these other analysts may not call it that. They call it a pullback, about 5 to 7% based on which of the indexes you're looking at. The S&P 500 did fall to support, which is around 2,800. That was 154 points off of its high. And our timing suggests, and has suggested all along, that May would be bad into June. So that makes another month of what we consider to be downside risk. It doesn't have to get a lot under 2,800, though we think it will get below 2,800 again. So we say beware of the rallies that come, especially when you get the talk coming out of Trump, who he and his mouthpieces will do anything to keep the market from falling. For now, we think those rallies are doomed to fail. We thought the rally this week would get to 2880. That's exactly what it did, and we'll tell you a lot more about that in the short-term view. But we do think 3 or 4 more weeks of choppy risk in here to the downside. But then July, August, and September look very good based on our patterns, and we're going to be looking for central banks to be out there trying to pump the markets again and pushing the market probably in the final hook for this bull market back up to those old highs. But that's the summertime into the fall, and right now we're still looking at a market that appears risky to us for the short term. Stocks for the week really narrowly mixed to lower. The only real index that got hit very hard so far was the Russell, down about 1.5%. The bond market gains about 1.25 points in the 30-year. 10 years fall 6 basis points. The yield curve is back to an inversion. Now, we had talked about the 3-month to 10-year inversion, and the markets got nervous on that. Well, now we're at a 6-month to 10-year inversion, and the 1-year to 10-year is only about 7 basis points to the positive side. So there is risk of that happening also. If the stock market does get a lot weaker, we're going to see that yield curve likely invert, and there is risk, of course, to the 2 to 10, and that would be nearly a panic if that actually happens. So the yield curve right now inverted to flattish, and the markets are rarely happy about that. It's not good for the bank stocks, certainly. Gold market rallied early in the week and then turned down. It's down about $10 for the week. Thursday and Friday were really bad for the gold and silver and platinum markets. Silver and platinum, the drivers now taking the lead, pushing those markets to the downside. We think gold is in a better pattern. And we also, if you watch our Future Speak on Wednesday, that show, we talk about gold being in a period where we think very soon it's going to be very strong. So we think this decline coming in here right now in the gold market is an opportunity. Dollar up 0.6%. It's stronger based on geopolitics and the news that's coming out of Iran, and that appears to be a real threat. So we sent 2 more warships over there this weekend, and we don't know if anything is going to turn out there, but geopolitics are bringing money into the dollar in a safety bid. Again, Japan, who's been negative interest rate policy, NERP, says they're staying there for the next year, but the yen is still strong, much stronger than the dollar, and that's something that we have been expecting. So the dollar moving sharply lower against the yen, despite all of this news and Japan threatening another year of this. Oil market on this geopolitical news moving up 90 cents. However, our patterns are very bullish. Now, it appears that the correction is over in the oil market, and we're going to be talking more and more about that in our short-term view. And then as the weeks go on here, in our Future Speak show, we're looking really positive in oil. All right, we're going to be right back, and I'm going to bring you the best and the worst stocks for the week with some pretty good opportunities. Whoops, well, where am I? There I am, right there. Put the wrong slide up there for you. All right, so we're going to get into the best and the worst stocks for the week. Before we do that, whether you're a novice trader or experienced, you can get tremendous help and great learning from our video library. We have 8 categories of videos, some 400 videos in there. I can't imagine there's a place that you could learn more from an experienced trader. Yes, 45 years I've been trading, and I'm also a personal growth facilitator and also an analyst, as you can see, in a very unusual style of cycle analysis. You can learn so much about all of that and about trading and the psychology of trading, or different stock sectors, or big picture analysis that we bring. There's so much in those 400 videos, and I encourage you to try it out and become, if you're not a member right now, just get our trial, which is just $18.50. To get 1 month of viewing all that you want to view of all of those videos. And you're just going to love it. You're going to learn so much. Plus, you're going to get our stock index report, which is just fantastic information for index traders, and also our ETF review. And the stock index report is updated very often during the week when the markets are moving a lot. So it's just great information. $18.50 for all of that for a month. How can you not do that? And it really helps us grow, helps us keep this show for free, and it's something that I really encourage you to do, and you're going to learn just a ton out of those videos. So send your request for that special link to support at askSlim.com, and they will send you that link. Just request the level 2 special $18.50 link for that trial. All right, so now let's get to the best and the worst stocks for the week. Where we're going to start is Applied Material, AMAT. This was the stock that had a great gain for the week and has a great pattern, and I'm going to show that to you and explain cycle analysis while I do that. This is Applied Material, AMAT, and you can see the chart here. It's got a lot of drawings and annotations. That's what our charts look like. And we have on the bottom cycle brackets. So cycles are a rhythm in the market. We call it the heartbeat. And you can see that this blue cycle right in here, there's a gray one right in here. And the reason there's a gray one is because that's an old rhythm. And what happened was there a shift. You can see that arrow right there. So we do that analysis and look for markets that change. One of the great things about, I think, traders that makes them successful is flexibility. And we actually have a video on flexibility out there. And that really is something that's important when you see little changes in the market, and then you can adapt to markets better. There's a little change right in here when this shifted, and then that pointed to a low time frame that you can see right here. Now look at this engulfing bar right there. Now often what happens at cycle bottoms is you get bullish candlesticks. You also get bearish candlesticks at cycle tops, like this shooting star warning way up here on the left that made that top. This right over here, which I don't have marked off, is called a bullish piercing pattern. It's almost an engulfing. So that comes right here at the intermediate supports. We have what's called a bullishly configured cycle. In other words, it's bottoming well above where it started, and that says that it is very likely to move up and hit the fib targets on the way up here. So you know we're calling for a better market into the summer, and we could see the stock moving up to 50 to 52.5, 53 at that fib target right there. And this looks like a bottom to that correction, like we're going to get a much higher move. Earnings beat, revenues beat. Analysts upgrade the stock, 11% gain on the week in Applied Materials, and we say yes to this. We think it's got upside to go. That is number one of big moves and bullish patterns. Let's take a look at Navistar. This is a very interesting story in Navistar. This looks pretty similar to what I just showed you in applied materials. I don't have the upside projections in there, and this was a little deeper decline, you can see, so we don't really project it to do a lot better than the old high because the decline was so deep. Still, the story on this is very interesting. Up 8% on the week. Volkswagen does plan a spin-off of Traton SE, taking that public. The rumors are that were they to do that, they would then be interested in buying Navistar. They own almost 17% of the company right now. So when you hear that kind of news at a cycle bottom with a bullish piercing pattern holding intermediate supports, that's really the spot that you got to say there's not a lot of reason for this to be moving to the downside. So we think that it's a buy in this area right over here, and very possibly moving to $36, $38, $40. We could see this stock also doing very well in the summer. Electronic Arts is the next one we're going to look at, EA. Now, this is a stock that's interesting because there were a lot of people that were bullish on this stock when we said not yet. We had this rally in here and we said, well, we thought it would be pulling back. Now, just look at these beautiful cycle lows. So you can see each of these declining phases right here and how they made a low. The rally, the declining phase right on. You can see that. And then the rally, the declining phase, a very deficient rally. Once it breaks under this level right over here, it's bearish. And man, was that perfect. Now another bullishly configured cycle. Hits the 50% right there and then begins to move up. The probabilities are above 70% based on cycle theory that it's going to move up to a new high. That high being over here, 108. Now this resistance is up at around 11 to 112. That's really a good target for the stock. We could see it be getting that very, very nice, 15, 18% move on the upside in here. This is a stock that gets a lot of news based on, how good or bad their sales are of their video games. And now this, to me, you see these 4 or 5 weeks here right around this support area. Right over here, when you get these declines, is when you have a potential for velocity on the downside. And when it's over, you have a potential for velocity on the upside. We like this stock. Analyst upgrade the stock. Wedbush puts it on its best ideas list for the year, and we agree. We think that the stock now has a correction that has ended and ready to move to the upside. Telephone is the next one right in here, and there you go again. There's a bullish pattern right there, and you can see the fib target zone. They're doing a cash tender offer to buy back some of their debt, and this is a great pattern right there, as you can see. This declining phase over these two blue spikes tell you that's the zone in time. Remember, we do this analysis in time and price that says the decline is over. Look at this, lower configured negative, lower configured negative, higher configured positive, very likely to go up pretty significantly. Target zone here about 34.5 to 35 on the upside. This is not a volatile stock. Still, that's about 10% we're projecting on the upside into the summer in a stock that we think has got very little downside risk. So, this is the kind of stock that's kind of gets a haven bid in it, and we like it. We have been bullish on the home builders. We were bullish last year, and we're bullish now. So look at this. Now, we showed you just now several stocks with upside fib target zones. We had the target zone in here, and it comes up and hits it really nicely. And now we're getting into an area where it's likely to start sloughing over a little bit and getting some correction, as you could see right over here. So the second half of this was in a corrective period right there, as you could see right here, and now we're getting into it. We think that the upside is basically, mostly over with. It could make a little more upside ground. The group, we've really liked it. And this says buy a pullback to us, over the next month. We expect the stock market to continue to be weaker, and we think that's going to give an opportunity. RBC upgrades the group. We've been bullish, and now we think it's rest time for a pullback because it's overdone. However, we'd be a buyer if that stock and that group did pull back. That is the best 5 of the week, and showing you some, what I think, great bullish opportunities in there as we move into, I think, the final phase for this correction over these next 3 or 4 weeks. For the stock market, those stocks that we showed you that I think are excellent buying opportunities. The next thing is the stocks that are pretty crappy. All right, so what I'm going to show you now is stocks that went down and may look really bad. Maybe not. Maybe some will have some opportunities in there. But first one is Baidu. I mentioned this earlier in the show. It had a big drop this week, and it was amazingly perfect based on multiple cycle patterns. For those of you that are students of cycle analysis, and we have a cycle workshop out there, go to our site and look at the cycle workshop and just watch the informational video on there. You'll be astounded just at the possibilities. 20 video modules that you'll be able to learn this type of analysis. This has two cycles in it. So we have the dominant cycle and the minor half cycle right over here. You can see the beautiful pattern right in here. And note that we had this note here that it was basing. That's over with. The base is now broken down because this stock, and I'm going to remove that because it's no longer correct, has moved down below this significant low, and the base is broken. So this pattern right over here, when you have two cycles that are pushing down right here, that is the most downside risk. When you have two cycles pushing up, that's the best upside risk. So this period right over here that we're coming to is the bottoming, the downward acceleration for the bottom and the capitulation, and then we'll get into a period of rally. But this is another negative cycle, and it is moving pretty sharply to the downside. Their earnings were bad, and their ad sales growth is weaker. And when you get weakening online ad sales growth, that is a tell for Google and Facebook. So I really, you could say, okay, this is a Chinese company, and maybe it's different, maybe it's related to the trade war, and maybe not. So let's just see if that's a red flag for Google, which I think is headed below 1100 now, and Facebook that's been very strong, and that's because there's lots of people out there trying to break up the company, and maybe that would be good for shareholders. But this really looks like it's got another week or two on the downside, and then likely making a bottom in there. But I think bad news for that group as a whole. So that is a look at Baidu, down 13% on the week. The next stock, Dillard's, DDS. So this is another one of those stocks that was looking like it was trying to get better, and then hits these final weeks over here and does poorly. Now, if you look at every one of these cycle patterns in here, once you get this cycle peak and the two of them are moving down together, you get big declines. You can see all of those right in here. 1, 2, 3, 4, all the same. This has 3-4 weeks more to go on the downside. I'm not ready to buy it. Are you? Below 50 looks like it's possible in Dillard's, and we'll just look for it mid-June, just like we're looking for the rest of the market. Earnings missed, and Wedbush comes out and says they see trouble for this company. The next stock is another very interesting stock, and that is Deere. Deere comes out, reports really a bad miss in earnings. Their guidance was very weak, and analysts all over it downgrading. What's this all about? Well, they blame it on the trade war. Farmers are absolutely crushed right now. Well, they're getting crushed by the trade war, but then the president says he's going to give them $15 billion. So how bad can they be hurting? Their plantings are way down on flooding, and they're switching around crops. And farmers are having the biggest number of defaults on their loans in years and years. Of course, when that condition exists, they're not exactly going to be making large purchases that they would be from Deere. So remember, Cat is not in the same category because they're mostly heavy machinery now and no longer farm equipment. But Deere is really a lot of farm equipment. And Navistar is not either, because they sold off that portion of their business. So it's really concentrated in Deere, and Deere is really suffering for it. Now, something that's very important, you see the lows right over here, and this is a cycle low support zone where you see these lows in here. So it probably gets support between 128 and this area right over here, about 135, because we're getting to the end of this cycle right in here. And there are two cycle phases in here that are called out of phase because they exist together And you can see very clearly the black one right in here and very clearly the blue one right in there as they align. And this is the bottoming area. So the worst of this is now going to be over with in the next couple of weeks, but then the rally is very likely to be substandard and potentially lower prices again. So that rally out into the summer we're looking for, it's probably a shorting opportunity in Deere. And when you look at this, you can see there are negative effects to a trade war that are very visible, and there are a lot more effects to tariffs that are very painful for the whole world. I am very anti-tariff. Have I said that before? Let's take a look at Xilinx, XLNX. Now, Xilinx appeared in our list of 8 stocks that we thought had the highest probability of pullbacks after big rallies to their moving averages. And you can see this one was incredible, coming now right down to that 34-week moving average, which is kind of what we thought would happen. Actually, we might have been looking for only the 13, but that came very easily on their poor earnings report. Xilinx, again, moving down after that major top. Analysts have lowered their targets on it. And our target is around 92, way down over here in the next 4 to 6 weeks. So we think there is more on the downside here in Xilinx. Bad pattern. And the last one we're going to look at, very widely followed, is Tesla. Tesla moves down on the week about 5%. Now, we have been bearish on this consistently. We saw a very weak pattern right over here where you had this mid-cycle low area and a rally that was only 2 weeks long and then coming down and breaking this low. We said that is really bad and likely to point to a decline way out here into September. So our projection has been under 200. It remains that way. It broke these key cycle zone supports right there, and there's just more downside in here. And the company is just in, every time you turn around, there's something worse about it. I mean, they've had to raise money. The NTSB said that a fatal crash recently was occurred while it was an autopilot. So, if their autopilot is not going to be that reliable and people get killed, well, that's not good, is it? And Barron's came out and they said that they're doing hardcore cost cutting in order to survive in here. And between that and everything else we see in these really bad patterns, we think it's pretty likely the stock is going to continue to fail on rallies and move lower. Sub 200 to us has been our target. We think now, based on what we see here, that looks pretty easy. That is the worst 5 stocks for the week. Some opportunities in there, and some just continuations to the downside. Be right back, and I'll give you a peek at what I think is going to happen next week. All right, so this is the short-term view for the coming week. If you're an index trader, so many people watch this short-term view, and we get readings on how long people spend on the sites and different aspects of the show, and by far people look at this short-term view the most, and people are very interested in indexes, and we know that. If you want to get our stock index report, that's our level 1. You'll get that, and you'll get a bunch of special videos that we have, and also you get our ETF review, which shows you just amazing information on that. For the ETF review, you're going to see comparisons in momentum, and the same thing on the stock index report, but going all the way down to intraday, so that it can help you with your directional decisions. So stock index report, it's just an extremely valuable and very economic product for you to sign up for. So look for level 1 if you are interested in our stock index report and trading the indexes. Short-term view, I always want to be accountable to what I said the last week, and I measure how I did by several different aspects. If I thought it was going to be up or down, the value of support resistances, the cycle patterns and how good those were. And I was about, I'd say 60 to 63% accurate this last week. Missed on gold because gold was weaker than we expected, and also the bond market, we wanted to buy a dip. We thought it would come down and then rally back, and it never dipped. It just went straight up. So the bond market, which we thought was going to be small down on the week, was actually up on the week. So we did not get that one correct. So we really did well on the light crude market on the dollar, and the stock market was practically a bullseye. So we did really well on those stock indexes. Let's take a look now as we switch over to the daily chart of light crude. Now, I mentioned in the beginning of the show that I thought that light crude was getting into a bullish period right now. Now, I'm going to show you a bottom in here that came as we expected. We thought that the early part of the week would come down, test these lows, and then move up. It's exactly what it did. Now you can see the resistances right over here. Now this low, or these lows right over here, appear in an area on the longer term charts that is the weekly cycle low period. That to us says that the likelihood that this rally is starting something significant is high. Now, often this first cycle right in here doesn't give you a lot of upside, and it kind of meanders up in here, hits the resistance, comes down, and then the next cycle gives you a good upward push. You can see what happened in here, where the first cycle was pretty bullish, and then it exploded to the upside, and then even the third cycle made an upside. For those of you that are Elliott waves, you would say that this was a 5.5 wave move, and then this correction right over here, and now starting the next upward 5-wave move. I'm not an Elliott wave guy, but I just thought that was pretty to point out. And I think we're in an upside move. We're going to call this another up week coming, though it's likely to be a little sloppy because, like I said, it's going to take a little time to get its upward traction. Unless we break out in war with Iran, that would change everything, and this would go to 70 or 80 or dollars. We have no idea how high. And you would see up here that these resistances would just disappear quickly. Right now, we're going to look for this move up here to the 64.40 area, to this area right over here, about 65.40. That's where we think we're going to get up to, into those short-term resistances right there for the moment. We'll call it an up week. Momentum has been down. You can see that right over here. It's trying to flatten out, but it's still negative, slightly improving, but not enough to give us a signal. If any signal we're getting, based on the projection oscillator on the bottom, that it's likely to flounder and pull back a little bit in here before it can really get much going on the upside. So we're going to call it an up week, but more of a choppy period and not quite ready to get anything explosive going on the upside. Next, we're going to look at gold. Gold is a disappointment. To me, I've started to add, oops, I don't want to do that. Let's just blow this up for you. I've started to add to my long gold positions in here, and I admit that the stuff I bought so far this week is not right, because you're getting this big capitulation right in here. I believe that's lining up with the selling that's going on in silver. This is the silver cycle right here. I won't like it if this gets under 1266. That's not that far away, because then I'm going to have to look at how this has shifted over and what this capitulation means as not setting the bottom yet. We've been looking for the bottom. We thought it might get down to 1246. I hate to see that happen in here. It's going to shake me out and make me do some work. I'd rather see it just turn up. We're going to call it an up week in here. Though momentum is choppy, you can see that momentum was negative, it turned neutral, it turned positive, and now it looks like it's going to turn neutral again. So when the slim ribbon is really close together, you get into these choppy periods, and when it moves up and down through it this way, well, then it's really choppy. You're not getting any great readings. You had that happen right over here. You can see that. And the information wasn't that good. So we have a up right there momentum, and you've got an oversold projection oscillator, which says it's likely you're going to move upright and up in the next week. So we're going to look for a rebound in here, moving to the upside, a small up week on this choppy momentum. The rebound should take you up here to about 1286. But not ready for any upward breakout yet. If we're right, and this is all bottoming, then the bottom of this cycle in the first week of June would then be where it moves to the upside. You could get a shakeout in here in the first week of June, have it take out these lows, and that would be getting rid of all of the longs and making me nervous. But that is a possibility, and I speak to that because of the weakness we see right now. I'm going to call this a small up week in this choppy condition that we see here in the gold market. Now we're going to look in here at the dollar. Now the dollar could give the gold market some help. Dollar sign DXY. This is the dollar. Now, we anticipated that the dollar would move up. We thought it would move down a little bit and then move to the upside. It was based on this cycle rhythm right in here. This decline came as expected. This rally came as expected. When you get down to the 78.6 or just below it, the resistance zone should stop it. The probabilities are high, over 60 or 70%, that this will fail in this area. Also, the longer term patterns are suggestive that this low was too early and this low is more likely to be the low of the correction. So we're looking for this to reverse. Choppy week this week and then turning over. We're going to call a down week in the dollar. Momentum is resumed to the upside right over here. So it might take a little work before this can move down. And that's going to, in our opinion, move the market, keep the market from falling much right now, but then rolling over the following week. We hope that this helps the gold market, if we're right about this, and saves it from breaking under that 1266 area. So we're going to look for this decline coming in. Now, you got to wonder. Fed funds are saying that there are 2 rate cuts coming this year. Cuts. And that should not be good for the dollar. We're wondering if the traders are going to get the message in here soon. I think if the bond market begins to rally, and interest rates fall a little bit more, then you're going to get this, or the bond market resume its rally, because it is rallying, then you're going to get the dollar moving to the downside right now. It could be that this upside move is because of what the Bank of Japan said this week. But patterns are acting exactly as they should. And now we're going to look for this to roll over and fail in this next week. So the bond market /ZB is the next one. We're looking at the 30-year here. We talked about the inverted head and shoulders right here, and that it was likely to trade up to the measurement right here. Well, that was beautiful. Also, the fact that it turned to positive momentum here in the right shoulder was a big help as it continued to move up. So this is fairly early in this rising phase. There's still upside room to go. So again, we're looking for the dollar to move down. We think it'll get help from this upside movement here. We still think that this is also a choppy area right there, as it finds resistance at the 150.22 area, and we're going to look for a range. So you see the slim ribbon right over here moving up. That tends to be support, and that's 148.25 is the middle of the slim ribbon. This is 150.25 right here. That 2-point range is kind of where we think we're going to be stuck in, though we believe that the upside bias is more favorable or more likely because of the momentum condition and the cycle condition. So upside momentum, strong cycle still, we think that if there's a breakout of the range, it's likely to be on the upside rather than on the downside, and that again speaks to what we think would be something that helps the dollar move to the downside and gold get saved from this weakness that it's in. So we're going to look for the bond market to have an upward bias in really a range or choppy condition right now. Stock market, this pattern that we've seen in there has been just really good. Market moving almost perfectly within the time and price rhythms that the patterns have suggested, and then giving the decline early in the week last week and then reversing to the upside pretty much as was expected, and hitting the levels that were expected also. The market today trying to move to the downside, but it's early in this rising cycle, this short-term pattern, and that's probably what kept it from giving a lot of ground. We would not have expected that here in the third day off of this low that it was going to fail. This is the sell zone right over here, which is at about 28.96 is the top of it right there. We would not expect it to do better. Now, we have a condition of negative momentum and an overbought projection oscillator. When you get that, the probabilities are very high that it's going to move down again. So we think this sell zone is good, that the markets are going to continue to fail up in these areas, all of the major indexes, and we'll be moving down again. We're going to call this a down week on this negative momentum. However, again, this is the kind of week where it's a little early for it to really accelerate strongly on the downside. We could get a lot of chop in here in this minor cycle, pull it down a little bit, but really it's out over here before you get into a lot of trouble. So the dates are the 1st and 2nd week of June, where this real downside acceleration is most likely. And to us, this would be the capitulation on this correction of the stock market that could get you down 7%, could get you down 10%. We don't really know. But this is where the real risk is. We're going to call this a choppy week, attempting to go down and the buyers coming in, and attempting to go up and the sellers coming in. And just the bias to us is to the downside, and we're going to remain in that posture until the market would tell us different. And after having this very, very long upside positive momentum period that you see right in here, that gave you this massive 300 and something point rally after it turned positive on the green arrow right here, to now having it turn negative, well, that is significant. And all of these swamp cycles in here that we've talked about all along, we're talking about how strong this condition is. If the condition has turned weak and the major directional component is turned down in here, this will fail in here. That will be the message, and that's why this is so important. So we're just going to continue to remain in this negative posture until the market tells us differently, with the first 2 weeks of June being the highest risk based on the pattern that we see here to the downside. If the market turns down and you get under 2801 right there on that low, well, then it's over with, and you know that the free fall downward acceleration is here again. In the meantime, we're just going to look for the market to chop around and flop around until it gets ready to make that next downward move. Small down move for the week potentially, momentum negative, and we think that correction still in play very clearly based on everything we see here. That's it for the week. Hope there was great information for you. Do become an askSlim member, a premium member. That's how we keep doing the work. That's how Arvi and Matt and our whole support team all stays on board here because of your support. Please do become an askSlim member. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city.